Very good morning to all our listeners. Hope you all had a fantastic weekend and an even better Thanksgiving holiday for any of our US listeners. Taking a quick look ahead in terms of what to look out for this week, starting off with some central bank decisions. Firstly, from the UK, the Bank of England this Thursday, not expected to make any real changes in terms of their interest rate at 0.5% or the asset purchase facility at 375 billion. Some saying that's somewhat of a non-event at this particular point, given the expectation of the first rate rise in the UK being continued to be pushed back out down the timeline. Most analysts expecting that now at the latter part of 2015. HSBC most recently just last week pushing back their UK rate call to Q1 for their first interest rate rise of 2016. Nonetheless though, the expectation there, again, pretty much non-market moving is the broad consensus. However, the minutes, which will be released 2 weeks after, will likely garner more attention. Taking a look elsewhere, in terms of Europe, we have the European Central Bank. They also have their interest rate decision this Thursday. Analysts not expecting any change on the three benchmark interest rates themselves. However, any more explicit commentary, particularly on this idea of fall below in QE, will be the one to watch for, and also any potential relaxation or extension of terms for existing programs, such as the TLTRO offering, which is due to happen in a few weeks' time. In terms of most recent source comments, likes of Constancio and the German representative Lautenschlager at the weekend, all very much downplaying any of this imminent need for QE action, with most subtle hints coming from ECB speakers that we'll hear more details on that particular programme in Q1 of next year. And then taking a look stateside on Friday, we'll see the release of US non-farm payrolls, the headline of which is expected at 225,000 at the moment. As ever though, in the interim period we'll see ADP released on Wednesday, which could well swing some of the expectation for that end number. And then finally, to wrap things up, we've already seen WTI crude futures this Monday morning in European trade touch a 65 handle, multi-year lows here as we continue to move lower on the back of A, a stronger dollar, B, the OPEC decision to not cut production last week, and C, the concerns generally over growth, giving some of the weak data coming out pretty much globally, but also with the manufacturing PMIs out of China this weekend. That concludes though the wrap for me. I wish you all a fantastic week and good luck.